Hey everybody, it's your friend Jason Pound here answering the top asked questions by homebuyers in today's Oklahoma real estate market. Question we're tackling today, is my mortgage lender ripping me off? Well, the short answer is we don't know until we compare them to other lenders and check their reputation. But the short answer is compare the APR, not the interest rate. However, as usual, let me over-explain. The government realizes that it is very difficult to compare lenders and have created a metric known as the APR, in which the interest rate, which is used to calculate your mortgage payment, is combined with the loan fees that the lender has control of to create what is called the annual percentage rate. This is the total cost of your loan from an annual perspective, and it's just like golf. Whichever lender has the lowest number is the one that costs you the least amount of money. And whichever one has the higher number is the one that is going to cost you more money. Many people like to compare interest rates. I have a 4%. Well, I have a 5%. I have a 6.25. Many times, interest rate is not the only consideration. How much did it cost you in fees to get that rate? And when you look at the APRs, it will tell you which lender is the better deal from a pure bean counting perspective. However, let me show you how some lenders are ripping you off and you don't even know it. When you file an application for a mortgage, the lender is required to send you a disclosure of the closing cost details. And it breaks it down onto one page, section A, all the way through section H. And what you need to know is the only section that the lender has control of is section A. They can't control anything else. And that's why this feeds into the APR and the other fees do not feed into the APR. Now, imagine you have one lender telling you that you are going to need $35,000 on the day of closing, and you have another lender telling you that you are going to need $42,000 on the day of closing. Now, when you look at this, it would appear that this lender is cheaper than this lender. But let's dig deeper on how this number can be manipulated. Because the government requires that one of these be sent out to you, and it normally takes a day or two for you to get it, many lenders realize that you are only going to be looking at these two numbers or this number. And you're probably never going to look at the number that's designed to protect you. Why do these two numbers not matter? Well, I know of some lenders who have high origination charges, but they guesstimate low how much the appraisal will be. They guesstimate low what the title fees will be. They guesstimate low what taxes and insurance will be. They guesstimate low what inspections will be. And when you look at their total estimate, it looks like you're only going to need 35 grand to close with them. But 2 days before closing, you're going to get a phone call or a text, and you're going to have a wake-up call that says, actually, we're going to need $7,000 more to close this deal. And you're in too deep. By then, you can't switch lenders, even though you are ticked off and you want to pop holes in all of their tires. There's nothing you can do about it. You've already sold your house and we're closing on it on 2 days. And if you back out, it's going to cost you thousands of dollars. And you already like this house so much, you want to go forward with it. And you don't have time to delay closing another 30 days. Because these people are about to be homeless if you don't close the deal. And in this pressure cook situation, you cave. And you end up going with a lender who screwed you over due to their low estimates. But instead, had you compared APRs, you would have found out that this lender that looks more expensive, although their interest rate wasn't as sexy, their fees were a lot lower. And your actual annual cost for having this loan are going to be less out of pocket. And because they were accurate in their estimates on taxes, accurate in their estimates on insurance and inspections and things of that sort, you were actually prepared from day one to show up with a $42,000 check. And you had a much less stressful transaction than had you gone with that slimy out-of-state online realtor rather than somebody local that you could walk up in their office and get up all in their business. This, ladies and gentlemen, is why you should go through your realtor to pick your lender. We have a bench of people that we know, we like, and we trust. Why? Because they have a local track record of success, of being able to close at the prices that they quoted in the timeline that they quoted, and they have great customer service. And they're not tricking people into doing business with them because their fees are so high and they're scared that you're going to look at the APR. My name's Jason Pound with Jericho Pound Realty Group. We service the entire Oklahoma City metro area with hyper-local expertise in South Oklahoma City, Moore, and Norman. If we can ever be of assistance, don't reach out. Don't hesitate to reach out. Don't reach out. I want you to reach out. Don't hesitate to reach out. We're here to serve. In the meantime, peace out. Have a great life. And you know what's going to happen next. I'm going to get back to work.